How's it going? It's Rocky. Welcome to week number 12 of our journey trading in the year 2024. There are two topics that I want to discuss today. The first one will be our performance on week number 12 with our sole PA that we have with Apex. And the second topic I want to discuss today is the myth of profit and loss ratios. But before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. This is the account report of the only PA that we have with Apex. It is currently suffix 17. So what that means is we started our journey in August 2023 and I have blown 16 PAs since then. Out of those 16 PAs, unfortunately, I've only had one payout of $1,000, but in 2024, we're hoping to change all of that and make some significant payouts from Apex and other funding firms. So what I'm showing right now is a 25K account, and that has a profit of $1,219.90. And those numbers, if you're not familiar with the withdrawal procedure from Apex, it means that I need to hit a minimum of profit of $1,600. And with that, I will be eligible to withdraw up to $1,500 after I've traded 10 days. And this nice chart here is showing my performance so far on this PA since we started it on March 3rd. And currently it is Sunday, March 24th when I'm recording this. So we've been trading this PA for 15 days. So I am eligible for withdrawal by meeting the amount of days traded, which is a minimum 10 days. However, I haven't hit the profit goal yet. And that's something that we're hoping to reach sometime this week, but if not, by April 1st is the goal for that. And before we go through this chart, I want to run through essentially our performance for the week. And you have seen this Excel sheet before. This is how I track my progress. And for week number 12, unfortunately, it was a negative week for week number 12. It was a negative $135.70. But that's okay because, our running total is still positive. As I mentioned, a profit so far of $1,219.90. And if we look to the right here, you can see our performance for the week last week. So I track that daily. It just helps me either look at the bigger picture on how we're doing for the week. I had a pretty significant loss here on Tuesday of $694.60. That included 2 max risk that I took, but I was able to climb back a little bit towards the end of the week and have that total of negative $135.70. And if you ever were curious about my numbers and the reality of it, transparency is pretty big on me. So if you ever go on my YouTube channel and go to the community tab, you'll be able to see a lot of these values that I post. I try to post it daily on how we're doing, and I try to put some comments on there on my thoughts on the market, what I may have done right or wrong. I hope you find this valuable. For me, when I was watching a lot of folks on YouTube in the past, the transparency part was always a key part that was missing. So it was always nice for me to understand what, quote unquote, a professional trader is doing and just comparing my performance with them, right? And I myself can't say I'm a very successful trader. I'm still working on it, but at least you'll have some sort of basis with someone who's a average futures trader. I have been trading futures for about 3-4 years now, but in the past year was really the first time that I'm doing it full time. So going back to this chart here, some numbers that I want us to focus on is, again, pointing out our total profit here of $1,219.90. And the next topic I wanted to talk about is the myth of profit to loss ratios. So our total profit on this 15 days with this PA is $4,725. And our total loss so far from the 15 days of trading a PA is negative $3,130. So there's this article that I found on Investopedia. It's called The Myth of Profit Loss Ratios. It was written by Grace Cheng. So I want to give her credit for this article. It was written in January 26, 2022. So almost at least 2 years ago, but I think the points that she discussed here are still pretty relevant. And with this trading, she pretty much talks about some key takeaways here, right? She's talking about the profit to loss ratio. And basically, she's saying that 2-to-1 is the ratio that is sought after. So what does that mean? So really, if you win $200, your loss should be just negative $100. That's one way to look at it. And that is a simple metric that she says that is misleading. And what she's trying to point out here is the importance of the average profitability per trade. It's a better way to measure the trading skills. So I have taken statistics and probability in college. I can't say I remember much of it. So please, if you're better at it than I am, please do correct me in some of the numbers that I'm going to go through here. So let's go down this article, and she's going to talk about the profit to loss ratio here. And basically, one that she points out is the blanket advice normally of a profit to loss ratio is to have a 2-to-1 or 3-to-1 per trade. And she's saying that this is pretty much a simplistic way of doing it because it does not factor in the realities of the market. And for us, our market is not Forex. We're not trading Forex. We're trading the index futures market. And basically, she wants to introduce this formula that uses the individual's average profitability per trade, which is a statistical expectancy. There's a lot of words. May have to read that a couple of times to fully understand what she's saying there. And hopefully I haven't lost many of you, but we'll go through actual examples to make this quite interesting. The formula that really I want to focus on is this one that she used here. And with this formula, basically, it's the APPT is basically the average amount that you can expect to win or lose per trade. So that's the more important number that needs to be focused on. And what this formula is pretty much the probability of the win times your average win minus the probability of a loss times your average loss. So what we're going to do is essentially do these calculations based on the statistics that we have so far. So I'm just going to do a quick snip of this one here. All right, so back to the account report. Let's look at our statistics and see what our APPT is. And the important numbers, again, as mentioned here, is first the average win. Our average win right now for the past 15 days is $47.43. And our average loss so far is $156.50. So that will be the values that we'll be using. And just let's put some variables on that so it's easier to remember what part of the formula it is. So this average win, let's call that AW per the formula. And then the other one is the average loss. So that's AL per the formula. And then the next one is pretty much talking about the probability of the win and a probability of a loss. So this is the part that people will probably check me on it, and that's totally understandable. So because from probability, the correct way of doing this will probably be using the normal distribution curve. So the bell curve, you probably saw it in class at one point in your career. It sort of looks like, let me try drawing the bell curve. Bell curve sort of looks like this, and it gives you a statistics from the mean on the probability of something occurring. But for this exercise, let me see if you agree with it. So what I'm going to use for my probability of win on this one is I'm going to use what my probability of winning trades so far. So really I'm using at my historical data the past 15 days to pretty much predict my performance in the future. And this is, historically, this has always been my percentage in trading anyway. So for the winning trade that I have so far, it's at 83.19%. So that is what we will call the PW. And then our losing trade so far is 16.81%. So that will be what we call the PL. So I'm going to bring the calculator just for us to calculate this. All right, so bear with me here. Let me put this next to each other. Let's put all these so it's easier for us to follow and calculate what's going on. Okay, so bracket. So on the formula, first one is the probability to win. This is 83.19%. So in decimal, that's 0.8319. Multiplied by our average win. So AW, our average win is $47.73. And closing the bracket. And then we're going to subtract. And then another bracket for PL. So PL, probability of loss. Again, I'm looking at my historical own data for the past 15 days. That is a losing trade of 16.81%, so 0.1681. And we'll multiply that by our average losing trade, which is $156.50. So what's this comes up with, which is kind of great, is that my APPT is $13.39, or really $13.40. So what does that value actually mean? So based on the article, what the APPT again really means is it refers to the amount that you can expect to win or lose per trade. So based on the calculation we made, we really have a APPT of $13.39. So with every trade that I enter, based on my statistics so far, I'm expected to have about $13.40. So what does this number really mean? From my perspective, it's just a way to maybe give me confidence because I'm doing okay so far. After failing for so long, I'm finally, hopefully finally turned the corner to make some progress. And again, if you just looked at the simplistic numbers, right? If you look at my total profit and my total loss, and if we were to do a ratio of my total profit to my total loss, that's not even meeting the 2-to-1 or the 3-to-1 that is the simplistic view of what it would take to be successful, because I've shown here from this calculation that we are doing just fine, and hopefully in the future we can finally start taking some payouts. Anyway, let me know what your thoughts were on this content. Again, I know I'll get some trouble with using my winning and losing trade as a probability of a win and a probability of a loss, but let me know how we could have calculated this a little better. Anyway, I hope you enjoyed that. I will see you on the next one.